Per usual, everything on this channel is for educational purposes only and is not intended as financial advice. It is Setup Sunday. Let's take a look at some charts. Got to talk about FOMC here for the first couple minutes. There is a Jerome Powell press conference this week, Wednesday at 2:30. Previous press conferences have been universally bearish for markets. So I would just keep that in mind. Maybe don't be 10,000x Bowden going into the press conference. Now, what is he going to say? He's going to say, based on our dual mandate, we probably shouldn't be raising anytime soon. Higher for longer. CPI is creeping up a little bit based on the government numbers. I'm going to dispute that based on Trueflation, but it is what it is. These are the numbers, and this is what we have to deal with. 6 and 12 month have flatlined, whereas the near-term 3-month is rising again, month over month rising again. He will likely get questions about the 2% target. Is inflation entrenched? What will it take to get us to 2 from 3? Do you risk running the economy off a cliff if you keep rates up here until July or whatever? That's what they're going to ask him at the press conference. But based on the data thus far, we're not to their target on inflation. And if we look at unemployment in this yellow line down here, unemployment is ticking up, but it is not significantly rising. And as many people have pointed out, unemployment's a super lagging indicator. So by the time unemployment does tick up, it's kind of too late, right? Then the recession is in full swing. The other thing is the yield curve inversion, which remains inverted. So it's going to be interesting and remains an interesting study in forward testing for the yield curve, unemployment, things like the SOM rule, which is when the 3-month moving average rises by 0.5 percentage points. Again, it sort of shows the point of no return. There were a few times when it happened that did not lead to a recession, but that is very, very rare. So once this tripwire is kicked, it's kind of over, right? From a recession expectation perspective. But so far, so good. So why not just keep rates here, is what he will likely argue. And now we're getting articles like this. Maybe the Fed should be hiking. Maybe the Fed isn't restrictive enough. It hasn't been restrictive enough. I'll talk about the reverse repo in a second, but you can look up things like fiscal dominance and just our debt situation. There's only so much the Fed can do. And if we just keep printing without a care in the world, the $34 trillion debt just kind of takes over at the end of the day. This was an interesting graph in the article here showing historic S&P percent moves since the last Fed rate increase. So 4 of the 5 hiking regimes have shown exactly what we're seeing now. Just continued bullishness. So sorry, doomers, it's not really that out of the ordinary. So what do I expect for meeting probabilities? He's not going to raise this meeting. Next meeting, we will probably fully price out a hike for that meeting unless something catastrophic happens with unemployment. And then I expect this June meeting rate probabilities to probably flip maybe 60-40 as far as hold versus cut. And then maybe towards July, we finally start to see unemployment ticking up enough where the Fed takes notice. Now, it's going to be really interesting if inflation is ticking up while unemployment is ticking up. And I hope they ask him about that. I hope they ask him about stagflation concerns. What's more important? What are your metrics, right? Like, what are we looking at here? What's important? Is it PCE? Is it core PCE? Is it super core CPI? Whatever, right? So hopefully he talks about that in the meeting. Before we talk about Bitcoin here, let me mention today's video sponsor, Kraken Pro. Kraken Pro is a complete overhaul of the Kraken trading experience with a one-stop shop for advanced and professional traders. Kraken Pro enables efficient trading execution across multiple markets with a UI that allows for unique optimization tailored to your trading style. You can check out Kraken Pro with a link in the description of this video. Not investment advice. Crypto trading involves risk of loss. Cryptocurrency services are provided to U.S. and U.S. territory customers by Payward Ventures Inc., PBI, DBA, Kraken. And if you haven't visited Kraken lately, Kraken Pro is modular, smooth, tons of things to trade. If you're overseas, you've got more options as far as leverage, staking, fun stuff. But these days, it's the only centralized exchange I use, thanks to the fee structure. For Bitcoin here, we've got halving coming up in just over 30 days, April 20th. We're certainly early on the halving-based price cycle. And again, it's going to be interesting. Do we have a US recession? Do we have a global recession? What matters here, right? Does the debt take over? Do concerns about the debt drive people into Bitcoin via ETFs? Or is Bitcoin continued to be perceived as a risk vehicle? I think we may see a shift in why people are buying Bitcoin in ETFs versus historically. You know, when you have Larry Fink on national television saying, if you don't trust your government, Bitcoin's an option, that's a pretty serious statement. So I don't think Bitcoin's recession proof, but it's certainly positioned well post-recession for a nice little move, considering halving and the ETFs are here. Looking at historically weeks relative to halving, you know, there's been a lot of talk about this cycle compared to previous cycle, and where's the top? Is the top sooner? Is it left translated? Is it right translated? What's going to happen? We can't compare to last cycle because of SBF and all the fraud. That I agree with. I think the concept of cycles is just going to melt away. Something you absolutely have to understand with the flows is, so again, look, we're early on this, right? We're basically like into the 25th week of where we've typically seen price moves this fast towards the percentage. There's 3 data points here, right? Like we don't have a lot of data. Okay. So keep that in mind. But the thing about the flows that people do not seem to understand at all. Okay. Like this is slow money, not fast money. This stuff takes weeks of due diligence, paperwork, meetings, calls, signatures to seriously consider. Okay. So what we've seen thus far, the 10 billion or so we've seen, is definitely early adopter money, RIA, money that's already ready to go, right? The big money, most of the money, is going to take time. There are a lot of people on Wall Street just sort of watching this, seeing how this plays out. There's a lot of people discussing outflows relative to price. Why hasn't price gone up more relative to the inflows? I've heard it all, right? The bottom line is, this is what you have to focus on. Over the next 1 year, over the next 2 years, do you expect more inflows or outflows? That's it. That's the only thing that matters. Now that GBTC is essentially been neutered to less than 50% of the total here, GBTC is going to become increasingly irrelevant, thankfully. And I certainly expect more inflows than outflows over the next 1 to 2 years, significantly. Okay. So this whole argument about outflows in the near term, outflows on Monday and Tuesday and Wednesday, like it just doesn't matter at all, right? I'm assuming because of the Friday and Thursday numbers were quite low relative to the previous 2 weeks that we probably saw outflows on those days. It's just we had in the individual products net inflows to cover the outflows, right? So if I want to cash out my ETF and somebody wants to buy more behind me, that counts as a net inflow for that product. This kind of reminds me of this argument about flows. It's not wrong, but it reminds me of the Tether arguments that I've heard, like, oh, the entire ecosystem is only as big as Tether is because when you try to cash out, everything is going to go to zero and whatever. So yes, bring on the negative flows. I'm bearish this week, so bring it on. Bring in 500 million outflows a day for the next week. I would love that. Absolutely love that. I don't think that's going to happen, but I would love that. Zooming way out, power law corridor looks great, continues to look great, has looked great since 2016 and prior. And again, if we're focusing on long-term stuff, like what do we care? What do you care about this week, next week? So we go to 56. Okay, what is your target a year from now? What is your target 2 years from now? So this cycle is left translated, right translated, sideways translated. Who cares? What is your target a year from now? What is your target 2 years from now? What is your target 5 years from now? Okay. It doesn't matter what's going on right now. That's what I'm trying to illustrate here. It just doesn't matter because we are on a significant trajectory, much, much higher. So it's important to keep that in mind. This is the 2-year moving average multiplier. We're almost to the midpoint here, well outside of the DCA in zone. That would be below the 2-year moving average in the green there. Historically, anytime we're above the multiplier, that's a good time to DCA out. Now, I would love to see all these models break. I would be a pig in slop to see price just cruising above the 2-year moving average multiplier or crushing the pi cycle top. Oh man, I can't tell you how excited I'm going to be for that day. So currently this projects the top at around 140. That's going to continue to move up kind of the slower we go. So we can only hope for a similar 2016, 2017 move. When I get to Solana in a second, the problem with those type of moves is they tend to peter out a little quickly, right? They kind of lose their momentum eventually as people are taking profit. It feels good initially, that quick burst of price action, but it's really hard to maintain that, just like NVIDIA. It's going to be hard to maintain that over extended period of time. The blockchain kind of has to grow into that price, whether that be narrative or inflation or whatever, right? But we look on the Bitcoin side on the 2-year moving average multiplier. As far as the daily cloud itself remains thin. If you're new here, cloud is a trend-based model. When you're above the cloud, you're bullish. You're only looking for longs. When you're below the cloud, you are bearish. You are only looking for shorts. When the cloud is green, that is a bull trend. When it is red, that is a bear trend. And when your intra-trend signal, your blue and the red, the TK lines here, are crossed as such, fast over slow, then you are all systems go. So ideally what you always want to see, price above cloud, bullish TK cross. Some warning signs for intra-trend overbought, oversold would be distance from the mean. So up until last week, I was saying if you watch Tuesday's video on the Kijun bounce video I did, we were very far away from the red line here. So since then we've calmed down a bit, which makes sense to me. We've also tripped the trailing stop loss on the Williams fractal at 67.5 or whatever that was. So I took a little bit off spot. I've been taking a lot of altcoin positions off. I don't play the Solana casino game. That's just not for me. It's not in my wheelhouse. The cloud here is suggesting a retracement to 56. Doesn't have to be this week. It doesn't have to in a straight line, but that is the mean reversion target. Ideally, we wick there and then continue. The safest setup is always something after catastrophe, something after this is GBTC outflows, right? This was a super clean month-long inverted head and shoulders. Like, I love that. That's my bread and butter. Perfect. I'll take that. I'll take a month. I'll take 2 months, whatever it takes. Maybe it's this week. I don't know, to get us to 56, reset a bunch of stuff, make a chart pattern that makes sense, and then go again. Perfectly reasonable. But the way the cloud sits here, the most important thing right now is this TK separation suggesting a mean reversion because the red line, the Kijun, is flat. So you can see in the previous quarter, we never really retested the Kijun until the very end. So the first warning sign is always breaking the fast moving average to Tenkin there, the blue line, which we haven't done, admittedly, but breaking the Williams fractal there is suggestive of trend slowing down pretty considerably. Long term, who cares? Near term, if you're trading this, definitely watch for that mean reversion. On ultra low timeframes on the 4-hour, we had a rising wedge that broke down. Here we kind of have a potential for an inverted head and shoulders. I don't know whether or not this is going to play out. At this point, the only thing that really matters is what trades during the week. That's when Wall Street's here, effectively. So this may or may not play out over the next couple days, but because JPow is speaking Wednesday, I'm kind of hands off until that meeting, and unless there's substantial evidence otherwise. But this is something to watch throughout the week. Anything above 69 after Wednesday would be ideal. The 4-hour cloud also agrees with that. Now, again, I would rather see this just be angry in the cloud for a week, test 62, breakdown, whatever. I don't care. Like, reset the 4-hour completely. It's just an easier entry. So we're either resetting everything here, cloud flipping bearish to bullish, TK cross flipping bearish to bullish, or we're just getting, a breakout at 69 with a bullish TK recross. So bullish TK recross with price above cloud on the 4-hour is good enough for an entry. That matches what we're seeing on the 1-hour setup. Otherwise 56, right? It's if this then that, but all this still looks very bullish overall. I can't tell you how many people this week messaged me about MSTR. 10, 20? Like it was a lot of people asking me about MSTR. Allegedly, supposedly, there was a fund who was short MSTR long BTC. That may have gotten blown out last week. Over the course of the week, they tried to cover the short, which means they would be selling BTC and buying MSTR, and it just kept going against them. It's a GME style, short squeeze a little bit, definitely a little bit of a mania, definitely a little bit of a overexcitement based on premium to NAV. And this is the ratio, and you can see over the past 4 weeks, right? I mean, that trade just went solidly against them. So if they were trading that and that was real, yeah, they probably got liquidated to some degree or had to close the trade. And that's why MSTR shot up. That's why BTC sort of had a lid on it at 70 to 73, because every time MSTR went higher, they would have to cover a little bit, sell BTC, right? Now, the reason people are taking this trade, at least they were, the premium to NAV wasn't as bad as it is now, but MicroStrategy, the company, including the treasury, valued at 30.2 billion. Sailor's BTC valued at 13.79 billion. So there's a significant premium above the treasury. Now you could argue the company's worth something. Okay, sure. Is it worth 15 billion? Probably not, right? Probably not. So I don't want to touch MSTR until this premium to NAV comes down. Again, I would love to see Bitcoin retrace to 56. I would love to see the premium to NAV on this just get crushed, as is typically the case. Once bodies get carried off the floor, then the trade plays out, right? It's no longer crowded, and it effectively gets crowded in the other direction. There are people talking about MSTR in the S&P 500, which may or may not happen based on the market cap. But just looking at this pitchfork, kind of gives you a sense of the rate of change here, where just if you were in this trade, short MSTR, long BTC, you got obliterated quite quickly, right? So as a buy, I like MSTR back to the midpoint of that pitchfork. All right, let's talk about Solana. As I said earlier, Solana has moved up quite quickly. This isn't the 2-year moving average multiplier, but it's similar idea, similar concept. Some moving average, I don't know if this is like the 90 or something moving average, and then a multiplier there. Basically, you're just looking at backtesting. Doesn't make sense at the highs, doesn't make sense at the lows. This does, you can move it around a little bit. Maybe look at the 6 hour, whatever that MA is. Both of these sort of point to 300, 400, not tomorrow, not this week, but eventually. And the faster it gets there, the faster it's going to just probably stall out at some point, right? Cycle wise, sure. 500, 1,000, I don't care, right? Sure. Like, it looks good. People are using it. If you want a seat in the casino, you have to buy Solana effectively. So it makes sense why it's acting like it's acting. This is Artemis now. And if we compare ETH to AVAX to Solana to Base to ARB to OP, Solana, hands down, is just crushing every metric, right? DEX volumes, transactions, active addresses. Even if we take off like the voting transactions in Solana, Solana's doing really well. Fees have come down on ETH thanks to 4844 on the layer 2 side. But the problem for ETH is they're kind of losing the narrative, right? Like, what do they have going for them that's better than Solana? Sure, Solana is congested right now. Fees are high. You can go down the list and tell me 10 reasons, but those are sort of good problems because of all of the crazy, wild activity that chain is seeing right now. So it makes sense that Sol has done well. Sol on the left here, NVIDIA on the right, and sort of a similar type of move where you're on the launch pad making the base, in this case, a cup and handle for Solana. I don't know how quickly we see 265. The cloud would like a retrace basically to 150. This may end up being a Burj Khalifa, right? Where it's just Eiffel Tower, straight up, straight down. NVIDIA could be the same, straight up, straight down. If NVIDIA retraces to 745 or 735, which is what the cloud wants, and it doesn't hold that level, it would make sense to go all the way back to the base. I don't think that's going to happen. But again, if this, then that. If the mean reversion doesn't hold and this mean reverts, which it looks like it wants to, watch out, right? Just another reason to be careful this week. If legacy starts to roll over, if the leaders in legacy start to roll over, crypto may follow. And alts, as many of us saw on Saturday, Bitcoin was down 3 to 5%, alts were down, 60%. Okay, so you just got to be careful. But sure, Solana looks bullish and it has the metrics to support that. It's not like some meme coin where there's literally no reason why it 10x in the past hour. You can clearly see the activity for Solana, right? People are using the chain. SMCI is another one just to watch. Again, TKC clamp. I like to watch this stuff, not because I'm trading it. I should have been trading this, but I wasn't. But from a cloud perspective, a learning perspective, how does this react? Does this play out as an ascending triangle? Does this retrace to the key June? Does it get a key June bounce? How does price react at 750 over the next couple months? Right? Those type of questions. Is this a double top? Is this an inverted Adam and Eve? It kind of looks like it. So even if you're not trading this stuff, I think it's important to paper trade this. That way you understand, let's say you get to Solana one day or pick your favorite meme coin and you see a similar chart, you have some idea of how this might act down the road. Sol BTC and Sol ETH also look very, very bullish. Again, Sol against ETH is just crushing ETH, and ETH is losing the narrative here, especially if ETH ETF approval odds get pushed out, which looks like that's the case. So I don't think this is a great place to get into Solana. Okay, 120 was that level, but it's definitely making the ETH people sweat a little bit here. As far as ETH on the daily cloud, again, bullish TK, C-clamp here, TK separation, breaking the Williams fractal. I took all my ETH off spot. I'm out of ETH completely. I'm out of ETH completely as of last week. I like 3,100. I would love to see the cloud reset. I would love to see another TK crisscross. That's going to take potentially 2 months, right? Like, I'm in no hurry to trade this. Let this reset, and then we'll get a real deal trend again. You can see how this based. It started at the bullish TK cross and then had its 80% move, right? It makes sense that it needs to consolidate a little bit, needs to slow down, catch its breath, figure out what it wants to be when it grows up, and then go again, right? So there's no reason for me to force a trade here on the daily. Even on the 4-hour, all you have to do is wait for the bullish TK cross with price above cloud with a bullish cloud, right? You're hoping that this resets, which it looks like it will. The cloud will certainly reset. This will probably dig a little bit underneath this 4-hour cloud. So the next trade to take on the 4-hour is the exact carbon copy of February 5th through 7th, whatever this was. You're just waiting for that, okay? Same thing. That's why I love the cloud. The concept is always the same as far as the trading signals go. Long high time frames on ETH. Look, the ETH stakers shouldn't care. This will probably go to 10 this cycle. I'd imagine around 10K, we will see ETH validators start to peel off. That's sort of like the hodl wave metric to watch for ETH. When do the ETH validators hit their number? Is it 6, 8, 10, whatever, higher than that? But eventually you will see ETH validators very likely start to peel off at those levels, is my guess. But the pitchfork looks fine out until 2025, right? 8, 10, 11 would make a lot of sense. And just like MSTR did this week, in 2021 to 2022, ETH even went well above this rate of change. So that's also a possibility. Just another high time frame North Star to watch. This is the 1-year moving average multiplier in this case, pointing to 10K plus pretty easily. So I don't think there's anything to be super concerned about. It's just the opportunity cost and relative value on some of this other stuff where ETH may lose out. ETH BTC continues to look like a diamond bottom attempt to me. Now, I didn't think the ETH ETF would get approved weeks ago, but as we go on here, it looks less and less likely. I could be wrong. It might get approved. Look, if you think it's going to get approved, shoot your shot, and you could have your stop loss, partial stop loss at like 0.55 and then 0.53, and then 0.51 would be the hard cutoff on ETH BTC pair. ETH BTC tends to do best after halving anyway, and it's really just a better trade, right? Like, let people get washed out, let this fail, let the ETF fail, okay? Let it be BlackRock's second failed application, and it's just a better long from way down here, right? In my opinion. Again, I like chaos, destruction, devastation, anarchy. It's just easier to pick up the pieces than hemming and hawing about this here, So this is not a trade for me on the long side until it gets above 0.601. Until then, this to me, it continues to look pretty bearish. ETH, I mentioned, the price isn't really a concern for me. It is the premium or discount, in this case, the discount, which has widened a little bit. I don't want to get too bearish on this because it's basically within the range of expectations here. But if this continues to widen out, that is the market saying, I do not think the ETF will get approved. That is what the market is saying. Okay. If the market was sure of an ETF approval, this discount would continue to close and hug that 5 to 8% level. But that hasn't really been the case here. So this is kind of like the live betting odds of what the market thinks ETH will do. Real quick here in the back end, let me mention some legacy stuff. So DXY dollar index has a potential diamond bottom in the making as well, unfortunately. And it had a sort of a failed inverted head and shoulders attempt, and it's sort of just wandering around this yearly pivot. But if we truly are higher for longer, the dollar could continue to strengthen. And ultimately, at this point, if we see a move above 105, then we know we're probably in trouble in crypto land. I don't know how low we would go based on the flows we're seeing with the ETFs, but that would not bode well for risk markets, emerging markets, globally. Things would get angry again. But this could play out as a diamond bottom, just as the euro could play out as a diamond top. So just two other things to watch in the periphery from a risk perspective, and it may not matter, but I tend to think it will if the euro breaks down, if the DXY breaks up. If we sort of look at everything together in context of liquidity, specifically the reverse repo facility, the inverse axis here, so this was the reverse repo in the white, gaining funds. This is the reverse repo draining. As the reverse repo is draining, S&P is up, NASDAQ is up, Bitcoin is up, ETH is up, meme coins are going crazy, right? So good news is there's a little bit left in the reverse repo. The bad news is once that runs out, that may be, again, coinciding with some sort of recession and or something else blowing up. I think we'll certainly know by the end of this month, definitely by the end of April, whether or not this liquidity squeeze effectively puts a top in the markets in the interim, right? Again, just something else to watch. What happens with DXY? What happens with the reverse repo relative to the S&P? Gold also is starting to break out, for the 5 people that trade gold. Bravo. Looks good. Looks fine. This should continue to move up. I have no issues with this as a chart pattern. It's just going to be very slow, right? This is a 3-year consolidation breakout. This is an all-time high for gold. Should move to 2,300, 2,350, 2,500 even, I think, pretty easily over the next year. It's just opportunity cost again, right? Now the S&P to me looks a little tired up here for the first time, breaking below that very aggressive diagonal support. Again, you have TKC clamp stuff. You've got TK disequilibrium support somewhere around 49.50 on the daily cloud. And I don't know how this RSI pattern is going to play out, but it's interesting that this has started to break down. So I would love to see the S&P just get crushed to like 4,900 while Powell is speaking. I mean, that would be amazing, right? Just grab some popcorn and watch the markets melt in real time. But this does not look like bullish continuation up here for me. Zooming way in on like the 30-minute, it's had this pretty aggressive channel that may have some sort of topping out pattern up here. This doesn't really measure anywhere, 510, 5010, whatever this is, 5010. It's less about the target and more about what this may kick off if the markets get angry about what Powell has to say this week, right? So something else to just watch collectively, right? NVIDIA, SMCI, S&P, very interested in what this RSI pattern is going to do. And the ultimate bearish target would be back to 4,600 on the cloud, if we look at a bearish edge-to-edge target. And I can't imagine Bitcoin would be too happy with that. Lastly, as sort of a hedge trade, I really like this XLE chart. It's the energy sector ETF. I'll talk more about oil and macro tomorrow, but if oil does start to curl up and the energy sector starts to come alive again, I'd expect this to do quite well. I like this chart pattern, ascending triangle. It's about 3/4 full. So to see this break out over the next, 2 months would make sense to me. That's all I have for this one. Like, dislike, comment, share, subscribe, and happy trading.